In the last year, Google is up over 30%, so is it still a good time to be buying into this stock? In this video, I'm going to be helping you decide whether or not you should be putting money into this stock or whether or not you should be taking money out if you already have money in. To do this, we're going to be looking at some of the key macroeconomic data, we're going to be looking at their financials, we're going to be looking at what could further boost Google's growth in 2025. So stick around and let's get into this. So as I said, Google is up 30%. They have an earnings per share at $7.53 at $200.87 and a PE ratio of 26.68. They also pay a dividend yield of 0.4. But if you do hold Google stock, of course, you would already know this. So what is some of the recent news surrounding Google? Well, of course, with Google being a massive AI player and the recent news of earlier in this week, the DeepSeek announcement, this has massively hurt Google stock and other AI stocks. However, when we do actually look at Google, they've still seen a really good week, and they have quietly announced their own, their next iteration of their flagship AI model, with another article stating Alphabet accelerating AI revenue growth with TPU chips. Artificial intelligence has fueled a major rally in the technology sector, driving up key market indices over the past year, and the S&P 500, heavily influenced by tech giants, has risen by 22%, whilst the tech-heavy Nasdaq Composite has surged 26%. Investment in AI is rapidly growing across various sectors. A recent Goldman Sachs report estimates that global businesses will invest nearly $1 trillion in AI infrastructure over the next few years. Of course, this goes against the fact that DeepSeek seem to reckon they made their platform with a fraction of the cost. However, there is now a lot of speculation around that due to the fact in which OpenAI is saying they basically stole their model. So I'm still on the terms that I believe that AI is a very expensive platform to build. I don't think that you can just do a DeepSeek and just pull it out of nowhere and say, look, we've made it. It's not that simple. I do think they probably did steal someone else's data to make that platform, but that's a story for another video. If you want my opinion on that, then let me know. But moving back onto Google, we have another article here saying these are the hands down two safest quantum computing stocks to buy right now. Where down here they say good news for investors that few companies that are at the forefront of quantum computing are already highly profitable and should continue to be if it takes a few decades for quantum computing to fulfill its potential, which there are rumors for it to do. I think the best and safest stocks in this group are parent group Alphabet for Google and Microsoft, which it seems like a pretty no-brainer of an article, to be honest, because obviously these are the most safest quantum stocks as they already have business in other sectors of the market, so they're not just relying on one sector like most quantum chips stocks are at the moment. Furthermore, quantumly, Google is definitely probably near the forefront of that at the moment. They're coming out with some pretty crazy stuff, with them actually saying that they think that they've got evidence for us to be in some sort of a simulation because they can't explain how their quantum computers worked in the way in which they did. I need to look into it more, but I saw this article at one point and that's pretty amazing, especially for a company such as Google to come out and say it must have some sort of grounding. But that's, again, we're getting away from the point of this video. So what are the economics looking like for this company? Well, when we look on Yahoo Analysis, we can see that they have actually beaten the earnings per share expectations, and they have beaten the surprise rate by starting at 2% all the way to 25% in previous quarters, with growth estimates being placed at 12.66%. I do personally think that is relatively low. I would possibly put that up towards the 15% mark, but we will play around with that when we get into my system in a short while. Before we do that though, let's just quickly have a look at the sales growth. So we've seen a 12% in the current quarter of 2024 estimated, of course, and in 2025 March we're expecting it to actually start to slow down, when at the end of the final fiscal year for 2024, we're expecting a 13.88% sales growth. Of course, these are all affected by factors across many sectors of the market. So, for example, you're watching this on YouTube right now. If you didn't know this, you're actually using a Google product. Obviously, you've got then Google Chrome, which they are actually facing potential risks with at the moment of potentially having to sell it off, as they do have a monopoly on the search engine market, allegedly. I don't think that will go through personally, but there is a lot of risk around that currently. And of course, they are massively in AI at the moment as they are progressing and developing further models. Obviously, with the DeepSeek news recently, there is risks to that again with US dominance in that sector. But personally, again, I don't think there is an issue there. But we do have the issue of actual solid stocks like Alibaba now announcing their own AI model. So there could definitely be reason for caution in that sector. And furthermore, of course, there is the quantum sector in which they are in, but I don't think we're going to see much development in that for the next 3 years potentially. But if you do want to get in early, it's probably a good time to get in now. Get in as soon as you can, as the PE ratio is currently at 26. You're probably getting in at a fair PE to hold it for that amount of time. Okay, so let's look at their financials and put it into my system, which luckily for you guys, I've already done. So looking here on the left, we have a liquidity ratio. These are on an annual basis, so ignore the quarter in the top left. So the liquidity ratio is really good. It's well above 1. Perfectly fine, nothing to worry about. Let's now move on to the retention rate. So looking here, retention again is incredible. If you're wondering why I'm getting through this so quick, I've done it many times before for Google. They're financially really sound. So they have a 27% retention rate on the trailing 12 months, which means for every 100% of money they bring in, which is $300 billion per year, they are actually retaining 27%, which is $94 billion, which is really good. And now looking at the free cash flow, this explains why their liquidity rate isn't so good, because all of their money is in their free cash flow. And looking at the difference between these allows us to see what development we could see within Google. And because there is about a 50% difference between each one of these, we can see pretty roughly that there is a lot of development going into something at the moment. Arguably, it is pretty obviously quantum or AI, which are two sectors which will definitely help this stock grow should they not have any disruptions. So let's look at a 365-day exponential chart now. So on here, again, relatively stable. We've gone from $150 to now being at approximately $200, and we are just above the exponential trend line at the moment. On the volume, it is a very similar story, and if we go over to a 91-day projection here, we can see that it is again a very similar story. In fact, we are pretty much bang on this trend line, and should we continue to see growth in this stock, I think we will continue to be on this trend line. So within 90 days, I think you can expect this stock to pretty comfortably be into the $200 mark. So what are the quick figures for Alphabet? Well, they have a PE ratio of 26.64, a 52-week high of 202 and a low of 130, this being a difference of 71. They've got a beta rate of 0.99, so they are just slightly less volatile than the Nasdaq, and the current price is set at $200.87. So now if we move down to the intrinsic value for Google stock, we can see here where the valuation lies within this stock. So using the growth rate in which we took off of Yahoo Finance and the surprise rate, we can see that we've priced this in at 14% year over year, with the earnings per share being set at 7.53. On the left here, we can see the intrinsic value is $247, which is well above where we currently are at $200. However, if we do actually add a margin of safety at 25% to this, we can see an acceptable buy price here at $185, which actually prices us in at a sell. Of course, that isn't actually a sell, that just means don't buy. But if we do move over to the right, more revised bearish formula, we can see the intrinsic value is set at $142, this being well below where we currently are on the current price. With a margin of safety at 25%, this gives you an acceptable buy price at 106, which is massively below where we are on both terms of the current price and the acceptable buy price according to the intrinsic value on the right here. It is most definitely a sell. However, if we look at the intrinsic value on the mean, we can essentially see here that we have a mean intrinsic value of 195, this being barely just above where we are currently, and a acceptable buy price at 146, which is obviously way below where we are. However, if I do play around with the growth rate, which I will do now, if I change the growth rate up to 14 plus the surprise rate still being set at the same, we do actually see the intrinsic value on the right has jumped up to 152, which is still way below where we currently are. However, on the left, we are seeing it to be 168 with the mean being 210. That means that technically it is still a buy, but that is dependent on their earnings being better than what the analysts are expecting. Furthermore, let's look at Peter Lynch's value here. This is obviously a very bearish value, so we have a result here of 0.58, which puts us in at massively overvalued. Personally, I think the stock is fairly valued currently, and I will go as far to say that I still think, despite the intrinsic value not being there, Google is still a very good stock to buy. It might be fairly valued, if not slightly overvalued at the moment. However, I do think earnings will be expectations in my personal opinion, and I do think future growth, I think in the long run, if you're looking to hold this stock, you're going to do really well out of Google stock. If you're looking to hold this stock for anywhere less than a year, then there's no point. There's definitely better options elsewhere. But if you're looking to hold this for a while, then it's always a good time to buy Google stock, in my opinion. As of course it is spread across many sectors, meaning it is very safe. It's like if say AI falls, don't get me wrong, Google is definitely going to see the impact. But as we saw earlier this week with DeepSeek coming out, it didn't actually affect Google stock too much because they are spread thin across many sectors of the market. And for that reason, I will be putting Google in at a buy, just because I do think the stock is always going to grow, and we are massively on track with the trend lines at the moment, suggesting that I don't think we're going to break free from these trend lines. But we will actually look at the moving averages later on in this video to see whether or not that is exactly true. So let's actually see what the analysts think about this stock. Let's not just take my opinion for it, even though I know that you want to take my opinion, but let's just now look at what the analysts are projecting for Google. So the analysts are projecting a relatively high amount of volatility in the next 90 days, with them reaching a low of around 150 and a high of around 250. I personally think we're going to see in the next 90 days it reach around the $215 mark. Furthermore, based off of 61 analysts, we are currently priced in at a buy, with 35 putting it at a strong buy, 14 at a normal buy, 12 at a hold, and none of them putting it in at a sell. And a 2025 price target being set at around the high of $235 and a low of $190, and the mean being set at $216. So again, I think that's relatively fair. I think that's exactly where I project this to go in 2025. So is it a good time to buy Google stock right now? According to the MACD trend lines, we are currently in a long position on a day chart, with us barely avoiding it here on the 5th of December 2024. Currently, we are looking to be relatively stable on the RSI, so there is nothing to worry about. So personally, on a daily point of view, if you're looking to hold long, I would definitely put this at a solid buy currently, as we are well above the bottom end of the MACD trend lines. Furthermore, to be expected, we are well above the 50, 7, 30, 100 and 200 day moving averages currently, with the 50 being here. This is if we were to see this actually cross over the position here, it would definitely not be a good time to be buying into Google. However, I still think momentum will carry strong with Google stock. I think you would be safe to buy this stock, I think, for the next 2 months. We're going to see a bit of sideways action, but still a bit of growth, as currently we're at $200. I think in the next 2 months we can project to be at around $206, which of course isn't a massive growth, but it is definitely growth nonetheless. So I'm going to end this video there. I hope you have found this somewhat useful and enjoyed the video. If you have, please do leave a like, subscribe and comment your thoughts on Google down below. Do you hold Google currently? Are you looking to buy Google? Will you be selling Google? Let me know in the comments below. With that being said, I will see you for the next video.